Hello, my name is Jerry. Welcome to Interesting Colors, and today I'd like to talk about the S&P 500 VIX, the volatility index, and MACD divergences. So we're looking at a grid of the indexes that has the closing prices and the MACD at the bottom. So if we're starting off with the NASDAQ, we can see that it's just slightly above the 30-day simple moving average and just slightly below the 10-day exponential moving average. And as we cruise to the S&P 500, we're basically in the same spot. And again, for the Dow, we're basically in the same spot. And if we get to the Russell is below the 30-day simple moving average. And oh, by the way, the 10-day exponential moving average has crossed below the 30-day. Here's a white arrow telling you what just happened. If we look at the dollar is basically flat, and the chart of the hour is the VIX. Now, why is the VIX significant? I'm going to expand this guy out to about a year so we can see what's going on. Maybe I'm going to expand it just for grins. I'm going to expand it to 2 years. So here's the significance. On the bottom we've got the MACD 613.9 exponential. This chart and the grids here, basically this is the same exercise that James goes through every day he starts a webcast. And I never realized it. I always thought I was always looking at the sectors as he was cooking through them. But the most important chart, in my opinion, in this series is the VIX, because the VIX is telling you how it's giving you how volatile the market is at any point in time. And if you look out for the last 2 years, the VIX really doesn't trend. I mean, it doesn't go make higher highs and higher lows for long periods of time. Over the total period of 2 years, we had a high of around 38, and the low went to about, look at that, 14. But you can see at various points in here, the VIX has pulled back. It's made pullbacks, and every time it makes a pullback, it pops up. The interesting thing about this is that every time it makes a pullback, the MACD at some point in the sequence starts to be going up. And when it hits that point where it starts to go green, the VIX actually ends up above. It ends up, in our case, above the 10-day, and eventually it will cross through. And it turns out this sequence is very interesting because I've looked at this for quite a while, and this is a divergence indication. So here's a case of where the VIX is falling down, 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 but you can see where the MACD is in fact rising. And it doesn't just happen, once in a blue moon. It happens quite frequently. And when things like this happen, you need to be aware of it. So I wanted to bring it up because, as it turns out, it isn't just the VIX that's telling you things are not looking happy. This is basically your friends, all your peers that are trading in the market. They have been watching the VIX come down, and all of a sudden they're, for some reason, becoming fearful. They're afraid that the market could crash, and they start buying puts to basically have protected save points in their portfolios. And as the more puts that they buy, the higher the VIX goes. And so when this happens, you're going to find out that at some point in here, that VIX is going to jump above this 10-day exponential moving average, or it's going to jump above this imaginary diagonal resistance line that we've got in here. And when that happens, it's It's the beginning of market turmoil, and with market turmoil, the prices typically always come down. So with those thoughts in mind, I wanted to show you the same kind of things that can happen. Now, right now, with the VIX, it had been in market phase 1, but as of, let's see, 4 days ago, the VIX closed above the 10-day exponential moving average, but was below the 30-day simple moving average. So it went from phase 1 to phase 2. So this little area right in here, these are all phase 2 points. The divergent conditions that we're talking about exist for stocks too, but it seems to be way more pronounced with the VIX than it is with the stocks. But let's look at let's go back and let's look at some and see what the colors look like, if you will, on the watch list. And when I look through the watch list, I'm going to look down this weekly gains column, and the things that I like to look for bullish entry points are, I like to look for black numbers. Black numbers with I need to change out of here so you can see them when I come across them. 27. Let's get synced up over here. So as I look down this list, I like to find things that are black. And so here's one. Medtronics happened to have a black number and a blue background. That is a white dot on the bottom down here. This is this white dot right here. That's what it's telling me. And that typically means it's the starting point of an inflection point to the rise. That's what it's telling me. And you can see every time we've had these, in this case, it always tries to climb a little. Doesn't mean it's ready to make a giant breakout, but it does mean that at some point in here, it's going to try and go up. It's reached that point where it's had enough. But generally speaking, when I look at the watch list, I do not see that. Well, here's one. PayPal is in that case too. PayPal got a white dot today as well. It's right in there. But that side of that, we've had a number. Most of the things in this area are all white letters, and the white characters mean that the dots are on the top side. So here's Boeing, which has been hot, but here's the white dot sitting up here. And again, it's trying to tell you that things are a little more unsettling, and it looks like it might be trying to go down. We haven't had a death cross yet. But it could be in a situation where it's thinking about setting up. And as I look through here, I don't see, most of the indications I see are white characters. These red bars are telling me that it just crossed. This is a death cross right here. So it's decided, in the case of General Dynamics, that it's going a little bit more towards the bearish side right now. The other thing that I see is in the breakout columns, I see a whole bunch of close below the high days. So if I pick on DD over here, there's a close below the high day. And if you look over on the chart, you'll see here's a little red dot saying, yep, we have closed down. And again, it all kind of goes back to the fact that the VIX is starting to rise up, and you're going to see a lot more of these situations. Here's Starbucks, where it's broken down. We've also got a 10-day. We also got a white dot up here and a magenta down arrow, and these things are all signaling that this is resistance right in this area. So that's what you're going to see when you end up with a MACD divergence on an upward moving MACD with a VIX that's heading in the down direction. So I just wanted to give you a heads up on that, because a number of years ago I looked to try and find a good key, and it turns out that's the best key that that I ever found, was looking at the VIX and the MACD divergence. Just one more time, check this out. So when you see this setup, and when you start to see the VIX coming down and the MACD rising, when you start to see it poking above here and the VIX goes to phase 2, that's a clue. You need to be thinking about putting on protection. You need to be thinking about tightening up on your stops. You need to be thinking about other protection policies that you should be using. So that's it on the subject. Thanks. Bye.